if you got a story to spin on it, sure.
Do I got a story to spin on? I draw that 50-year chart of Qualcomm for. I mean, come on.
It looks like this: way up, way down, and then for the next 20 years.
Yeah.
Am I approximately close on that?
Yeah, it's pretty good. Pretty good. Hey everybody, I'm JC Parets, founder of AllStarCharts.com, and I am joined once again with my main man, my esteemed colleague, Mr. Sean McLaughlin.
Not the founder of All Star Charts, but I find it very interesting. Well done, JC.
Like that? No, Mr. Sean, he's my options guy. I mean, even yesterday, I'm like, volatility's elevated, premiums are high. Seems like the type of environment that we would like to collect some income. The way we look at it, cash, in our head is just laying there on the sidewalk. We just got to go over there and pick it up is sort of how I look at it. And we're doing that today, are we not?
We are attempting to do that today, yes, JC, with the options being elevated like they have been for the last few weeks. We want to be erring on the side of having the mean reversion of implied volatility working in our favor, so that this is not a time for us to be taking aggressive bets and trying to hit home runs. We're trying to stack the odds in our favor and just kind of, dink and dunk, get little wins here and there. And the best way to do it, the best way I know how in this type of environment, is to put on trades that are either delta neutral, that are collecting premium, or taking directional bets that collect premium. Now, again, we're not being aggressive here, but we are being tactical, and we've identified a stock here that we think is setting up pretty good here. If you want to bring up the chart of Qualcomm, let's bring that up and talk to me about that breakaway gap.
Oldie but goodie there, Sean. Are you able to see it?
It's it's an oldie but goodie. You and I were talking before we went live. I'm like, wait, wasn't this a $1,000 stock before? This is at all-time highs now, and sure enough, there it is.
New all-time highs. This chart really zooms out. Doesn't really make the point of what we're doing today, but really kind of puts things in perspective. A lot of you guys have been trading for a long time. Remember this name from way back in the day. Did absolutely nothing for 2 decades, and now it's back, baby. Old school tech. And then when you zoom out, you can see those late 2020 highs. A little bit of a false start. We finally got that gap and go in the fourth quarter. Now retesting those levels. And one thing that I wanted to mention is that there's a lot of people getting chopped up. I talked to a lot of traders. A lot of people are having some of their most, Sean's like, yep, struggling over the last several months. And then when you take that into account in the options market, what does traders getting chopped up translate into? It translates into traders that have been long volatility, long premium, are the ones making the donations. But while they're making all those donations, there's always somebody on the other side of that trade. And we have, fortunately done a good job over the last several months of being on the other side of those trades. And this is one of those. So while not everyone, but a lot of people are getting chopped up, someone's got to be on the other side. Hopefully this is us once again.
Yeah. Well, and one of the big reasons why Qualcomm showed up on our radar, showed up for a couple of reasons. Number one, it was in the follow the flow report last week. So there was some options activity that was going on under the hood. That's not why we're getting into the trade, but that at least brought it to our attention. But then also, we collectively at All Star Charts, we've been paying a lot of attention to relative strength over the last few weeks, right? I mean, it's at times like these where the markets are getting slippery and sloppy and all over the place. It's at times like these that the next leaders for the next bull leg in the markets, they're revealing themselves now, and they're revealing themselves through relative strength. And so Qualcomm is one of those names that has been on our radar as a name that, it's sold off like everything else sold off over the last 2 weeks, but in relative terms, it didn't really get hit all that bad. And it found support where it needed to, that being at the bottom level of the range we've been in since that gap back in November. So that's a level we wanted to see it hold, and so far it has. Now look, we need to be aware of two very important things. Actually, one very important thing here, JC, and that is with the implied volatility that's elevated right now, one part of that is because of the sell-off we've seen, and that's normal. That's the kind of behavior you expect to see when stocks are selling off. But also in a week's time, this name will be announcing earnings, and that's also putting a bid in the options prices. Now,
or potentially a lack thereof. You don't know.
Right. Well, now look, we typically don't put on earnings plays. That's not our brand over here. That's not our secret sauce. I'm not against the earnings trades.
It's really hard. That's why. No thanks.
Well, they're really hard and they're just really short term. So we're not making an earnings trade bet here. But we are aware that earnings could be the catalyst to send this thing back up towards in the direction of its highs. We don't think, we could be wrong, but we don't think that that this stock's going to get hurt too bad coming out of earnings. And that's the bet we're making. The bet we're making is that this gap is going to hold. Earnings are not going to be, they're going to be a non-event or maybe beneficial to us. And in that case, we're not aggressively bullish here, but all we need QCOM to do is just, kind of hang where it is now or bounce a little bit, and the trade we're putting on will make money. So you want to talk about the trade we're putting on here?
Sean, so the bet that we're making is not so much I think it's going to go to the moon, right? And right, that's not what it's just going to hang out and kind of just do nothing and let volatility and that premium deteriorate and decay, if you will. Why don't we walk through the actual strategy of this particular situation? Not to put words in your mouth, but it's not like a situation where it's a low volatility environment where we're super bullish, buy calls and call it a day. It's not one of those at all. We're not just going out and selling naked puts either. Why don't we walk through sort of the thought process of the put spread?
Yeah, we're definitely not selling naked puts because, with the earnings event that's coming up, yes, we're making the bet that the earnings is going to be a non-event or possibly a positive event. But hey, with earnings, that just introduces a whole lot of unknown. And the last thing you want to do is put on a trade with theoretically unlimited risk when you're heading into a big unknown. So we're not selling naked puts, but what we are doing is selling a bull put spread. And what that means is we're selling the 165 put, which is slightly out of the money. The stock is, when we put the trade on, the stock was at around 170. It's since sold off like everything else did this afternoon. I think it went out around 167, 168.
Yep, 167.
Yeah, but we sold the 165 puts in March, which is about 50 days to expiration right now, which is in the sweet spot for when you're selling premium. Selling the 165 put and protecting $10 away with a 155 put. And we collected $3.50 when we put the trade on. Right now, if you were putting the trade on fresh, you could probably get $3.75 for it right now, thanks to the little sell-off we had this afternoon. Either way, still love the trade. And look, JC, $3.50 is what we're collecting up front. Now, the plan here is not to hold this thing all the way to expiration and keep that entire $3.50. That would be nice, of course, but that's not the goal here. The goal here is to hit it and quit it, right? Just take the quick premium coming out. Our bet is that if this thing works out, it's going to work out quickly following earnings. So once the earnings event is out of the way, which is on February 2nd.
Hey, it can happen before that. You never know.
It could, of course, it could happen before that. I'm not making that bet, but coming out of earnings, if we have any kind of positive results and QCOM is rips higher from here, we're gonna have a quick opportunity to close this spread. I'm going to be closing it at $1.75. So I collected $3.50 when I put the trade on. I'm going to buy it back at $1.75 or cheaper if it happens to be cheaper, but $1.75 is where I want to get out. I just want to keep 50% of the premium I collected up front. I'm not trying to hold it all the way till March. Like I said, there's 51 days until expiration. I don't want to hold it for 51 days, JC. I'd like to hold it for 10 days. That would be ideal. And then move on to the next thing. But on the flip side, that's how we win, okay? And we win by QCOM not breaking the lows of the recent lows.
But if it does, Sean, every time I put on an options trade, it breaks through my stop, right? What about those people? What are you saying?
Well, look, our risk is defined, okay? In an absolute worst case scenario, and this worst case scenario really only happens if QCOM gaps down 100 points like following earnings. I don't see that happening, but in a worst case scenario, the most we could lose is 650. All right, that would mean the QCOM traded through our spread, traded down below 155, and we held it all the way to expiration, and the stock closed below 155. But guys, If we see a close anywhere below 155, whether it closes at 152, 149, doesn't matter. But as soon as we see that close below 155, if it happens, that's our signal to exit the trade. And I very much doubt that we'll suffer a full 100% loss there. We might have to pay at most 450 to get out, which is a completely manageable loss in this situation. But 155 is the level we're watching. If we see a close below 155, that's when we're out. And the good news, bad news is, if that happens, it's likely going to happen right after the earnings event. And the fact that we'll still have so much time till expiration means there'll still be a lot of premium left in those options. So very unlikely we'll take a large loss here, if in fact we do take a loss.
So a couple of things. So, well, JC, why don't you just buy the stock? Well, you can buy the stock. There's nothing wrong with that. If you want to buy the stock, I think against 160, you're probably okay. That would put us up above the late 2020 highs. If you want to own the stock, great, buy the stock. We personally are not the most bullish in the world of Qualcomm. It's more of we're not bearish the stock than we are so much bullish, number one. Number two, by putting on this trade, it's a higher probability outcome of success. It's not going to make your year, but it's a high probability success rate. So that's another positive in my opinion. And then also from a portfolio construction standpoint, if you have exposure where you're, long volatility, exposure where you're long stocks and, you have directional exposure, this is a very nice complement to that portfolio construction that is really completely separated from any of those trades. And when you do this throughout the year, it really, really adds up. So those are just three quick points that I just wanted to add there, Sean. How do you feel about that?
No, I feel great about that. And I want to add one thing that you said about this being a high probability trade. I mean, look, let's think about the stock here for a second. The stock, it's going to do one of five things, right? One of them is do nothing. One of them is it's going to rip higher. Another, it might rip lower, or the more likely scenario is it's going to go up a little or it's going to go down a little. Those are the five scenarios, right? Well, the trade that we've put on in all five of those scenarios, in three of those scenarios, we surely make money. So if the stock rips higher, we win. If the stock goes up a little bit, we win. If the stock stays sideways, we win. The fourth thing is if the stock goes down a little bit, we may or may not win. It kind of depends.
Still probably win.
Yeah, but we could still possibly win with that fourth. So really, there's only one out of those five scenarios where we definitely lose, and three we surely win, and the fourth we might. So it's.
And if it is that loss, if it is that 20% chance, right, that one of five, it's not going to kill us. We could still come back and fight another day, which I really like. By the way, let's just go over what the trade is specifically. It's going to be the Qualcomm QCOM March 165, 155 bull put spread for approximately 350, 375 in credit, depending on where you get it. That means we're going to be short the 165 puts and long an equal amount of the 155 puts. The risk is defined, high probability trade, nice complement to our diversified portfolio, skewed to the long side and long premium, which is most people, right?
Yep. All right. Well, that's our trade for the day. Look, it's been a tough market out there for a lot of people. We talk to all of you. I mean, our customers talk to us all the time, whether it's on Twitter or sending us emails, and people are having a hard time. But you know what? The nice thing about the options market is that there's a strategy that we can find. There's a handful of strategies that will work in any type of market environment, whether we're ripping higher, we're ripping lower, if we're sloppy. There's always an opportunity out there, which is what I love about options trading is we don't have to sit on our hands and do nothing, although sometimes that is the right move, and you know that, JC. But hey, whatever Mr. Market throws at us, we have an option strategy that we could potentially make some money at, and I love that.
I love it, Sean. You're the best, baby. Everybody out there, shoot us an email, info@allstarcharts.com. Follow Sean at Chicago Sean. Follow us at All-Star Charts, and let us know what you think. Do you like this trade? Do you hate this trade? Do you already have the trade on? Are you putting on the trade? Reach out. Say what's up. YOLO responsibly.